Hey everyone, Dingo here, and welcome to the Saffron Academy podcast. The objective of this podcast is to be an additional educational resource for our viewers. Saffron Finance does not endorse the viewpoints shared in these conversations, nor should this be construed as any kind of financial advice. But we are interested in giving exposure to a wide range of brilliant investors, developers, entrepreneurs, traders, and so much more. If you have an idea for a topic or a particular guest request, feel free to write into the show at dingo@saffron.finance. I hope you guys enjoy this, and I'm looking forward to seeing what kind of value this provides. Today's guest is Ben Simon, a researcher and investment associate at Mechanism Capital. In this episode, we talk about how Ben got started in the industry, his macro outlook, potential government regulations for crypto, applications for Saffron Finance in the future, and so much more. We had a great time recording this episode, and I hope you all enjoy it. Thank you. Okay, well, as you guys know, my name is Dingo, and today I'm joined with Ben Simon, a researcher and investment associate at Mechanism Capital. Ben, how you doing today?
I'm doing great. Thanks for having me on, Dingo.
Yeah, no problem, man. I am really excited to get to, talk a little bit more with you and kind of hear sort of your story on how you decided to pursue this sort of researching role and have this sort of like laser-like expertise and focus on different areas in DeFi and how you got into that. But before we get really into the weeds here, I think a lot of people would be kind of curious to know like what really made you start to get into crypto, I suppose. Like what was your light bulb moment?
For sure. I mean, yeah, so I think I've had a few different light bulb moments. I've said this before elsewhere, but I first got interested in crypto back in late 2016, early 2017, specifically Bitcoin and Ethereum. But really, at that point, it was mostly actually like a political economic interest, almost philosophical interest in Bitcoin specifically. I think I was very drawn to this idea of a permissionless, censorship-resistant currency, specifically with these hard money qualities in Bitcoin. And Ethereum was interesting. It was intriguing as this concept of smart contracts or a smart contract execution platform upon which applications can be built. But that seemed very abstract and sort of removed from like what was actually necessary. And I didn't think there was actually much happening on Ethereum at the time. And I don't think I was missing that much. I think I missed maybe some quality, ICOs, but I think for the most part, those struck me as pretty scammy. And so I think, at the time, Bitcoin was really what was interesting to me. I actually ended up joining. I sort of learned about crypto on my gap year, and a friend of mine, who's now a classmate of mine in college, ended up starting this blockchain, broadly speaking, sort of data security startup that was using some of the threshold cryptography that other crypto systems use. It wasn't really a crypto startup per se, but I was sort of interested enough in sort of blockchain and crypto that I decided to join. And the startup fizzled out. We got a little bit of funding, but especially after the whole 2018 boom bust cycle, it sort of fizzled out. And I sort of lost interest for a couple of years after that, and after the sort of bubble popped, and then rediscovered crypto, specifically Bitcoin, after COVID, really in lockdown in March and April of this year. And so that was this rediscovery. I guess that whole stage I would say is like my really early crypto consciousness. But it was only in sort of May, June that I sort of started looking beyond Bitcoin, back to Ethereum and specifically to DeFi. And there was, I guess, a light bulb moment. Like, I've discussed this elsewhere, but I remember there was an investor formerly at Dragonfly. His name is Alex Pack, and he was talking about how Bitcoin is interesting, but how it's ultimately sort of insufficient for in accomplishing a lot of the ends that it aims to accomplish in terms of decentralizing the financial system and sort of making it more open and fair, not sort of having these sort of central points of failure and all this moral hazard with bailouts that sort of existed in 2008 and sort of continue to be endemic to the current financial system. But he was saying that Bitcoin is great as this sort of monetary asset. And I think this is sort of something you'll hear from a lot of different DeFi investors. But Bitcoin as a monetary asset is great, but what good is it truly if it's ultimately sort of just entrenched and sort of plugged into the existing financial infrastructure? There's a lot more that's problematic and sort of ossified in the current traditional financial system than just the monetary assets that we use, like the U.S. dollar, or other fiat currencies. And so I thinking through, some of the actual trust assumptions behind, centralized exchanges and, other kinds of ways in which banks are sort of tethered to, for example, central bank interest rate policy, and thinking through sort of how everything in the financial system, sort of in the traditional financial system, is sort of intertwined in ways that are often not good, in ways that sort of create a lot of complexity, a lot of inefficiency, allow for a lot of rent seeking, drew me, I think, to a lot of what I ended up seeing happening in DeFi. And it wasn't just that these were ideas that were being discussed. It was, these are actually products and protocols that I could use. And that to me was wild. And, so as much as Ethereum was interesting to me as a sort of concept back in 2016, 2017, it really became much more tangible in 2020 when I was sort of playing around with AMMs and got my first loan on Aave and Compound, and those are really exciting. It was like that was a light bulb moment. And I think I've said this also, but I think there's going to be a lot more people coming in to DeFi, specifically people who are interested in Bitcoin. I think there are a lot of Bitcoiners who will never sort of give up just sort of this Bitcoin maximalism. But I think also, it's kind of funny. Bitcoin, there isn't so much. There aren't so many new things that happen with Bitcoin. There's some people that write really interesting things, but a lot of it's just maybe infrastructure building and institutional adoption. But there isn't really new experimentation happening. New data, new incentives, new mechanism designs, and all of that's happening in DeFi. So I think almost out of just maybe pure interest or even potentially boredom with Bitcoin and sort of with this just pure monetary asset. And I think that's actually what Bitcoin ought to be. It should be sort of this unchanging, static monetary asset. That's what gives it its stability and its strength. And not stability price wise, because obviously it's still pretty volatile, but sort of that's what gives it its lindiness, its hardiness. But that's also, I think, going to push people to look for more exciting, innovative, features and sort of ways in which crypto can actually provide value to the world. And I think that's that's sort of what's eventually going to bring even more people into DeFi. I think it's going to be maybe through Bitcoin, but in part because Bitcoin is just this, a lot of critics call it like a pet rock, and it is not just a pet rock, but it should really be this static asset. And so I think that's part of how I got into DeFi and crypto more broadly, and got beyond this sort of like Bitcoin only mindset.
That's a really, really good answer. You touched on a lot of things that are really kind of salient in my own life too, and in my own experience, where it's not so much that I have a one light bulb moment. It's that I just sort of have this sort of series of little, like the curtain gets peeled back a little bit more and more. So, like for example, uh, I am the only person working at Saffron within probably about, I'd say at least probably like a 1,400 mile radius. And so I have like my own office space that I rent. And we ran into this issue where, and I won't say who, like what company it is, but we ran into this issue where I was erroneously charged, uh, like quadruple charge for this month for April
Wow.
for yeah for rent, and they clearly recognized it was an error and it was wrong, and they were working on processing the refund. But I have been waiting for like 3 weeks while they go to their IT team, which then their IT team has to go to their payment processor, like all these like hoops and ladders to jump through. And I'm just like wanting to just shake my screen and just be like, just look at the Etherscan transaction to find out where the money went.
Yeah.
And there we can find it there and get the refund process, because I guess they're
Exactly.
having issues locating the refund or wherever the refund was sent to. So it's just like little things like that, I think, that really sort of solidify how archaic our current financial system is. And I think how, DeFi is the big real shining star right now in terms of like a lot of the smartest minds and the most interesting people I feel like are getting behind DeFi because they're realizing the possibility of like, how this could really fundamentally shape the future of how we do finance, how antiquated the old system is. I mean, for God's sakes, like the ACH payment system, it doesn't even work on on weekends. It's 2 days out of the week, where it's just like the banks won't even process an ACH payment.
It is totally crazy. Yeah, I totally agree.
Isn't it so wild?
And Hasib last, I think on your last episode was talking about, I think he was at Airbnb or something, and the payment system, and talking about how sort of convoluted and complex things are, even if it gives off this sort of, under the veil of being, very simple and elegant, but in reality it's like this total mess. And it's like, yeah. And so, I think like thinking about I think there are some very, very clear just benefits of like DeFi and sort of the sort of mechanisms behind it. You're talking about like the transparency of the ledger and the sort of ease at which capital can move freely across different platforms, the programmability of all these different applications. And I think it's interesting to think like I'm not exactly a maximalist in the sense that I think DeFi is just going to purely eat CeFi or TradFi. I think there's actually some things DeFi can't do, and things that, for example, they're still figuring out. So like the most obvious thing I think is like in a trustless system, like what DeFi aspires to be, like this concept of credit is very difficult. So I don't think anyone's fully nailed how to sort of provide under collateralized loans in a safe fashion yet. I think there are some really interesting projects and protocols that are sort of tackling this issue. But this is almost like a bedrock of the traditional financial system, that you trust people, not only intermediaries, but you trust your counterparty, and for that reason, you can extend them credit. And in a trustless system like DeFi, which is built around these assumptions that you can't trust anyone, you have to sort of assume rational self-interest and assume that any counterparty or any sort of other player in the system is going to abscond with funds if it's in their rational self-interest to do so. That is sort of a fundamental difference, and I think creates almost like a fundamental thing that DeFi has to sort of maybe can't do. I think maybe there actually will be solutions to that, but I think there are some limitations on what like DeFi will eventually be able to accomplish. And I also think as much as I think they're just like, you can easily point to many different things that DeFi just does much better than traditional finance. I also don't think that the people in traditional finance are going to simply just say, okay, like DeFi is better and we're just going to quit our jobs. The banks are going to close. I think more likely you're going to see like, actually, and this is sort of something I've been thinking about recently, is like how is DeFi going to evolve over the next few years, not just in terms of the products and the product offerings, but in terms of like the ethos. So I think you're going to have people who are decentralization maximalists and sort of purists, in the sense that like we can't integrate with the institutions. The institutions are corrupt. We don't want to see JP Morgan using compound cash chain or whatever it is. That's not what we want. We want a purely decentralized system. Or you're going to see a more accommodationist ethos and a mentality that's that says, look, they're like, we think DeFi is better, but we also think that it's not the case that TradFi is just going to sort of roll over and just sort of step down and DeFi is going to replace them. And also it's the case maybe that there are some things that TradFi already does well, or does in ways that DeFi just can't do. Maybe it has to do with these trust assumptions and credit. Maybe it has to do with other things. And I think you're going to see sort of two camps emerge, and sort of the accommodationists and the people that want to integrate with more traditional financial infrastructure, even maybe while reforming it and sort of gradually, incrementally improving it, versus people who want to sort of tear down the system and sort of be sort of a maximalist about decentralization. And I think you could probably tell by how I'm describing these two camps where my bias lies. And as much as I'm sort of ideologically committed to DeFi, I don't think that like DeFi will expand and evolve in the future by being sort of purely siloed away from traditional finance and the traditional financial world. I envision a world in which eventually, Ethereum, or I think it's going to be Ethereum, but it could be some other sort of layer one, settlement layer. But these will be sort of plugged into not only the financial system as we know it today, but also to like a real economy of goods and services. Right now, DeFi is very much a self-enclosed, self-referential system. Liquidity moves around seamlessly. It's this sort of beautifully programmable and composable system. But at the very same time, it's not really connected to much else outside of it. It's totally inward facing. And I think the next real leg up for DeFi is going to be figuring out a way to plug in not only to the financial system in the sort of the TradFi sense, actually what banks do beyond just provide liquidity and provide a way to gain leverage and to speculate, but also to sort of become the bedrock for a goods and services economy. And I don't actually know if that means, I think there's an interesting distinction here. Like I think a lot of people back in 2017, 2018 wanted to take blockchain technology and sort of put everything on the blockchain. So put supply chains and put, electronic medical records and put all kinds of sort of random things like, whatever you could think of, like, use blockchain. It almost became a buzzword. And I think we've sort of evolved beyond that. I think it's clear that this technology, like to call it blockchain technology, to use that sort of fancy buzzword that is now sort of out of fashion. That's really good for like a lot of the financial applications. It creates this composability, but maybe like what's actually necessary for like, traditional businesses in the sort of non-financial sense, the ones that are providing goods and services, and not is not to actually use blockchain technology on their own, but to actually just have a way to access a financial system that is sort of built around the efficiencies and the sort of seamless flows of capital that that are made possible by sort of having Ethereum and other blockchains. So I think that's like an important distinction, because it's not just like, oh, everything is going to become blockchain based. It's not. I think actually a lot of things don't need the blockchain. It's really that maybe things will plug into like financial systems where liquidity and capital are sort of exist on this kind of immutable ledger that is Ethereum, that's programmable and transparent, like you were saying. And yeah, I think that's an important distinction that I think a lot of people are sort of on that. It's sort of, I think people have sort of accepted that now, and have moved away from the sort of like blockchain to everything that the blockchain integrated into everything, which is very much 2017, 2018.
Yeah. Well, I think that's something that I've been giving a lot of thought to recently as well. I mean, ideally, in a perfect scenario, we will see some sort of amicable integration of DeFi being injected into CeFi, and some sort of marriage between the two. Um, because I agree, I think there are certain things that the traditional finance sector does better than DeFi does at the moment, but I think there's also a ton of merit to a lot of the stuff that DeFi does that traditional finance just does not do or won't do. I think the worst case scenario is that there's some sort of uh, invisible war that happens while everyone is trying to like hang on to their own kind of grasps of power and influence in their own respective
For
sectors.
sure.
But
I totally agree. And I think like, and this isn't to say I'm very much, a DeFi, like DeFi is what I spend all my, all my time, especially in crypto, doing and like thinking about. And I think, like there are very clear benefits to the infrastructure upon which DeFi is built. And those, whether DeFi looks like it does now in 5, 10 years, I don't know. And I actually don't think it will. And, it's when I talk to people who are critical, who know what's going on in DeFi and are critical of it. And I have some friends who are sort of outside the system, but maybe are aware of the different protocols and know how it works. And they often say, okay, the criticism is, well, what is DeFi actually being used for right now? And this is going back to some of like the self-referential points. They say like DeFi really is being used for speculation. So like, why do people get loans on Aave and Compound? Well, what are they doing when they do that? What are people doing when they create a CDP on Maker? It's really they're leveraging up on their crypto so they can speculate on more crypto. And, what are people using Uniswap for? They're using it to trade crypto. What are people using synthetic asset protocols for? It to trade crypto. And I don't think that this is necessarily wrong, but I think it is also a bit myopic, because what could you have used Amazon for in the early days, or like Yahoo, or even Google? Like it's Amazon wasn't it just like to sell books initially? Like if
yeah,
you had been in the
yeah,
if you had been deep sort of in the weeds of the early days of the internet revolution, you probably also would have been skeptical of the current use cases. And so I think it's a fair critique to say that a lot of this is self-referential, a lot of it is used for speculative means, but or speculative ends, I guess I should say. Um, but that's not to say that it won't remain. That's not to say that that will always be the case.
yeah,
And I think
yeah,
it takes a lot to sort of look at the technology and say, okay, this is what the technology is. This is what it's being used for, and to be honest about that. I think there's also true like non-speculative usage that is actually happening right now. I mean, I know that, for example, USDC is like Circle, the company behind USDC, has worked with the United States government to provide sort of uh, uh, like dollars to citizens of countries that don't have stable currencies. So, for example, I think there was an article that came out a few months ago about how Circle is working with the government to provide dollars to sort of go circumvent I think it's in Venezuela, like the Venezuelan regime that's been
yeah.
inflating their currency, and that's like obviously a very real use case of like Ethereum and USDC, and there are for sure like very very there are real world use cases, real world in the sort of non DeFi native sense. But I think it's good to be honest about where things are, and I think that's what will allow us to sort of look for the next sort of the next leg of this sort of development and evolution.
Yeah, and I think it's interesting. I'm glad you brought that up about that scenario happening with the USDC because I have seen several. I don't want to say articles because they don't really gain that much mainstream attention. Like everyone's more, it seems like lately, everyone is more concerned about the energy consumption FUD or whatever. That seems to be the only thing that makes the headlines lately for crypto. But I have seen on more than one occasion of people, and granted, it's the internet, so who can really say for sure? But I don't see too much of a reason for these people to embellish so much. But they're from third world countries. I believe it actually was Venezuela where their tyrannical government has had a stranglehold on their economy and their commerce, and crypto is, like, literally their way to escape from that tyranny, and it because they're not allowed, I guess, to buy into foreign markets, so they can't really buy the S&P or they can't, set up a Roth IRA or something like that, and they have this escape hatch in crypto, uh, that is, usable around the world. And I think that that is an incredibly wonderful thing that it can help people in third world countries. That it doesn't really get a whole lot of praise, I feel like lately, but
I totally agree.
it's just interesting seeing that evolve organically.
I think I agree for sure. I guess people who are I would say people who are skeptical of crypto in part because it's very difficult to regulate because transactions are anonymous, even though everything is of course traceable on the Ethereum ledger and Bitcoin too. But people who are skeptical that because of its anonymity, it's difficult to regulate, and they worry about North Korean government being your counterparty when you're trading or getting access to liquidity, U.S. dollars, trading Bitcoin, mining Bitcoin, and or the Iranian government or any sort of country that the U.S. sanctions. That is a real worry, and people point that out. I guess to me, I always look at what you were just talking about in terms of like access to U.S. dollars and access to sort of financial instruments for people who are in developing countries, and not only developing countries, but really in countries where
Mhm.
there are sort of dictatorships, and especially sort of dictatorships that sort of that destabilize the currency and sort of create this economic unfreedom. So like you can't really have a system like crypto that allows for what you were talking about, as in like this ability for anyone in the world, including if they live in a free or not free country, to access these instruments and these applications and this liquidity, while also sort of cutting off the sort of people that you don't want. It's almost like if you want the North Korean people to have access to crypto, and maybe they do, maybe they don't, I'm not sure, then almost by default you're also going to be having the North Korean government's also going to have access to it. And I don't know exactly, like from a regulatory standpoint, you could make the argument, well, like the US government isn't just sanctioning the Iranian government, they're also sanctioning the Iranian people, so the goal is not just to prevent the Iranian government from having it. But I think like this is sort of the trade-off that comes with crypto. It's you can't really have your cake and eat it too. You can't have this system where anyone in the world can participate in it, and then also say, okay, we don't want the bad guys or the people who we think are bad guys to be participating in it. And
True.
that's I think an honest trade-off that exists in crypto. And I think it scares a lot of people who are sort of worried about maybe geopolitical problems. But I think it's actually a trade-off that makes sense to make.
Yeah, I man, that's a really good answer. So I guess I know we're getting a little off topic here, but I'm glad we're on this tangent too, because it is something that has been at the forefront of my mind for the past few weeks, and just thinking about this stuff on a macro level. Um, how do you feel about any kind of like, think of the right way to phrase this? Um, how do you feel about just the typical sort of like worry that the government is going to intervene, or at least let's just talk the U.S. government. Um, what are your thoughts on that? I mean, I think regulations at some point are inevitable and maybe almost a requirement for this to really get the adoption that people are looking for. Like if we're talking about, $500,000 Bitcoin or something, really crazy like that, it seems to me like there needs to be some sort of give there a little bit. But or what are your thoughts on just regulations? Is that a real kind of worry of yours going forward, or what do you see that as?
Hmm. Yeah, I mean, I think it's a really good question. It's something that I've been thinking about a lot. I do think people have said. I know Dan from CMS said this on a podcast a few weeks ago. I think he's not the only one to say this. That I think there will be some sort of exogenous shock to the system, as into DeFi, particularly to like tokens and to speculation, through because of regulation. I don't think there's any clarity right now. I don't know exactly what that is going to look like. It may actually not be so much of a shock as much of maybe just like a little bit of a
Mhm.
scare, or maybe it won't even be. It'll be like fully positive and an endorsement of everything that's happening in DeFi and sort of a total free reign from the government. If that happens, I think obviously that, I don't actually think that that would be the outcome of any kind of, government regulation. I think most likely there's going to be something that they sort of clamp down on. And, but how and when that will happen, I'm not sure. I do think, DeFi has been growing a lot, and it's probably, if it keeps growing at this pace, it's going to be sort of, it's not going to be an option for regulators and for politicians to just ignore it. I guess though, it's very possible that regulators and elected officials will see what's happening within DeFi, and there'll be enough crypto advocates that are sort of communicating well, like sort of the potential of this technology, and sort of saying and sort of arguing that you should sort of look past some of maybe the more unsavory things that happen in crypto, in terms of maybe scams and rug pulls and all these things. There was a bill, I think, presented to the House. I don't know if it was voted on yet, but it was a bill on 8th actually, that was presented by a few members of the House, showing a committee,
Yeah.
a joint sort of commission between the CFTC and the SEC. So it's not just like the SEC is going to be coming down and and going to be doing some sort of working group and looking into crypto and DeFi. But what this is to sort of say, and I have no idea what the outcome of this working group is, like what kind of regulation they're going to recommend, if any. It's going to probably happen after about a year, it sounds like. But I think, broadly speaking, this is pretty good evidence that, regulators are looking into digital assets, DeFi in particular. We know that because a lot of, because, President Biden appointed Gary Gensler, who is obviously a professor at MIT and was an expert on cryptocurrency and blockchain specifically. So I think, for people who think, regulation is far off and like, governments are not looking into crypto and DeFi and all these things, I think they're potentially in for a rude awakening, if they think that there's just nothing that's going to happen. But exactly what that looks like, I don't know. And maybe it's actually, maybe it's actually going to be more supportive as opposed to destructive than other people worry. So I know that's not like it would be foolish for me to sort of speculate on what kind of regulation or how the government's going to end up establishing some sort of posture towards DeFi and towards digital assets more broadly, or crypto more broadly. But I do think it's going to happen at some point. There will be some sort of guidance, and I don't think, even if, no matter how restrictive it is, I think part of the nature of this industry, and this is sort of the lifeblood of it, is that it can't really die because of government crackdown. And I certainly hope that the government doesn't. I mean, I think there's a lot of, obviously I think this because I'm in this industry and I'm like trying to work to make it succeed. But I truly believe that like this carries like so much potential for the future of the United States and obviously the world in general, in terms of finance and even just sort of like open participation in these systems. And so I don't think that the government's just going to shut it down. I think that would be probably not what's going to happen, but I don't know. I think it would be I can't speculate, but I think you're right to be thinking about these things. And I think a lot of the people who are really deep in the weeds of these and like investing in them and building them are thinking pretty deeply about what that's going to look like and how that's going to change the space going forward.
Yeah. I think that it's really important that we have is, good, strong voices speaking out in favor to politicians and going up the appropriate chains, to educate some of these politicians kind of on the benefits of cryptocurrency and to look past the negative aspects of it. Which again, though, like, let the currency without sin cast the first stone. I'm sure there has been countless atrocities committed using the US dollar that we will never know about. But
Exactly. And and I think the government did a good job, like throughout the sort of early days of the internet, and there's a lot more regulation that we've seen over the past like 5 years with Facebook and Google, and a lot more sort of government oversight and sort of maybe, I don't know about negativity, but maybe more skepticism, I would say, like coming from politicians and regulators about sort of big tech and specifically these large internet companies. But I would say, like in the early days, the government in general in the United States, like did actually, I would say, did a pretty good job of facilitating innovation and allowing sort of these things to play themselves out. And I hope that they do something similar for like this Web3 era, as we like to call it.
Yeah, yeah, me too, man. I think the next few years would be really interesting, and I think you're right in saying that regulation or some sort of government uh, maybe pressure is too strong of a word, but I think that stuff is closer around the corner than a lot of people would like to admit, especially at the rate that this is growing. Um, so I guess let's kind of walk back a little bit. I am so glad we had you on because this I love this conversation topic that we've gotten onto, but I'd like to hear a little bit more of like, how you kind of really got drawn into becoming like a researcher and doing like kind of analytical work and how you landed a job doing that sort of stuff. Just in case like, there's listeners out there that are curiously interested in crypto that are looking to apply their own skill sets from maybe traditional finance or maybe they have no background from finance and they're looking to kind of, establish themselves in a new career. Like, how did that journey for you sort of play out?
Yeah, it's yeah. I guess we've had a lot of we've talked about regulation and we talked about TradFi and all these large theses that I haven't even given a proper introduction. But yeah, so um, I ended up, as I guess I told you a little bit about how I got interested in Bitcoin, and then had this sort of light bulb moment, as you put it, with DeFi. But I didn't really talk about what happened after that in May or June of 2020. And what happened was I started diving in, and I'm a would be senior in college this year, but I decided because of online classes that I definitely didn't want to go back to school. And not only did I not want to go back to school because I didn't like online classes, but also I was so fascinated and so sort of drawn into DeFi and what was being built, and wanted to be a part of it. And whether that was researching, investing, or building, I wanted to sort of I wanted to dive in even deeper, and probably do what I thought was going to just be maybe like an internship for a year. What has ended up turning into much more than that, and I guess unsure of whether I'm going to be going back to school next year or maybe even at all. Hopefully, my mom's not listening to this.
Yeah.
Um, but uh, but I think I'm actually, yeah, I'm planning on staying, and I think this is sort of such a special industry that I'm planning on staying for like the foreseeable future in it, as in not going back to school. But in terms of May or June, I was like thinking, how do I get involved in DeFi and crypto? And so I what I did, I actually, it was funny. I tried messaging some funds on LinkedIn, some like crypto investment funds. It's funny, I got like zero responses from any of them. And I won't publicly shame the ones that I messaged. Just, but it's funny because this was like an interesting, if you want to look for a job in the traditional industry, or at a think tank, or at a financial firm or consulting firm, or anything like that, you sort of LinkedIn reach, message a recruiter, or you email a recruiter, you send a
Yeah.
cover letter and a resume. And it was funny because what ended up happening instead was I ended up reaching out on Telegram and Twitter to other people, and got easy responses, and had like many more leads for jobs that way. And that was sort of one of my first another sort of realization of how special this industry is. They're not concerned with shininess and like all the formalities of LinkedIn and like emails and cover letters and all these things. It's really just like, who are you? What can you contribute? How do you think about crypto? Like, how hungry are you? And what do you bring to the table? And there's a reason why a lot of the most successful traders, investors, and even builders in crypto, I mean, Sidekeeper, are pseudonymous. I think there's something very special about this industry that allows for this like meritocracy and really idea meritocracy to flourish. But so, anyways, I was able to get in touch with a few protocols, and ended up also connecting with Andrew. Andrew Kang's the head of Mechanism now. And the funny thing is, actually, Andrew had written in the summer and spring of last year. He'd written a lot of really good threads on what he ended up calling liquidity black holes. It was his sort of thesis around AMMs in general, and sort of thinking about Rune or Thorchain was one of them, Bancor was another, and thinking about how these AMMs were going to sort of grow over time. And there was this cyclical liquidity pattern of incentives leading to more liquidity, leading to more trading volume, leading to more fees, leading to more liquidity, and so it's like cyclical pattern of how sort of AMMs were going to be this liquidity black hole. And he sort of went pretty deep in the weeds of these different protocols, and I found his threads totally fascinating. I was reading as many as I could, going back way back into his Twitter history and doing the same for other DeFi investors and other sort of DeFi thought leaders, I guess, for lack of a better word. And I ended up actually having some questions about one of the threads that he had written, in particular about Bancor and their at the time new approach to impermanent loss mitigation. Impermanent loss, I guess, just to explain briefly what it is AMMs, meaning like Uniswap and Balancer, SushiSwap, Bancor rely on sort of a simple pricing formula to price assets for users that want to exchange, and they rely on liquidity providers to sort of to I guess provide liquidity to sort of send their tokens into the AMM, and that liquidity is then used for traders or who want to sort of buy one asset from the liquidity pool, meaning this AMM, and sort of sell another into it. But because these are sort of passive instruments, I guess actually Uniswap v3 is more active, which is something. It's these AMMs are evolving very, very quickly, but AMMs sort of traditionally have been pretty passive in terms of the pricing, and so they lead to something called impermanent loss, which is where, if you are providing, let's say 50% USDC and 50% Ethereum, and the Ethereum price triples, then if you decide to withdraw your liquidity from the AMM, you're actually left with less Ethereum tokens than when you put in more USDC, but less Ethereum tokens. And actually, what you withdraw is actually less as sort of in dollar terms than what you would have had if you had actually just held 50% Ethereum and 50% USDC. And so that's sort of it's generally thought of as, this problem. Others have argued it's sort of endemic to AMMs. It's not really going to change. It's sort of a fundamental property of them. But Bancor at the time, this is a bit of a tangent, but Bancor at the time had come up with this new version 2. They're now on version 2.1, which is actually much more like version 3 because it's very different from version 2. And it was a very complex, single-sided liquidity staking AMM with really interesting properties. And Andrew had written a thread about it, and I was a little bit concerned, not concerned, I was a little bit confused about how it worked. And so I ended up just messaging Andrew and in the chat, and we had a pretty nice sort of Twitter DM conversation. I actually tweeted about this a couple months ago because I think I love what this represents about crypto. And at a certain point after we had this sort of brief Twitter conversation, he's like, I'm looking to bring someone on to help me sort of do some bookkeeping and look through diligence some deals and sort of keep track of some projects. And, I'm wondering if you're like interested in potentially like, a job or a part-time role. And so we ended up talking, and he ended up turning into more than just a part-time thing. And, he and Daryl Lau, who has also been very DeFi native and is also just a very good friend of mine, had just linked up and started Mechanism. And I ended up joining very soon after they started. And it all started because I reached out to Andrew on Twitter, and I had no prior experience in crypto. All I did was actually try to interact with him and interact on Twitter and sort of try to ask interesting questions, try to understand what was going on, share my own thoughts. And so I think if there's anything I take from this, not only sort of, I think how beautiful it is for like an industry that can allow sort of anyone to just, reach out to people like Andrew, people like Sue, and other sort of, these incredible developers, and just ask questions in the Discord, or ask questions in Telegram, ask questions on Twitter, and interact sort of like with some of these people. I mean, in what other industry can, if you're to go work at, Bridgewater, could you just like ping Ray Dalio and ask him a question? No, you couldn't do that. And obviously, like there's just these layers of hierarchy that stand in the way of this. And I think crypto is much more flat. Not only is it sort of an idea meritocracy, but because everyone is, working on these projects and online, and, Twitter's this sort of, yes, it can be a cesspool at times, but it's also really an amazing forum for debate and for sort of interactions and sort of productive conversation. And so that's I guess one thing, just taking away for me like how amazing the industry is, not just in terms of the technology, but in terms of the ethos. And then the other thing is like, I know you asked Hasib this last time, but what would you sort of what I don't know if the question was like, what do you wish you would have known, or what kind of advice would you provide to people coming into the space? And I guess to me, it's like, I think getting involved in some of these conversations is extremely important. It's less important to I think I realized I was maybe using Uniswap and like maybe trading some DeFi tokens, and that was all good, and I was learning through that. But what I really the way I broke into DeFi was not by like learning how to trade and sort of managing a portfolio on my own, but was really doing research and trying to sort of dive deep into the mechanism design and having some of these conversations on Twitter, in Telegram groups, on Discord, and really like learning as much as I could about the individual protocols.
Yeah.
And then being bold and talking to people. A lot of people will have their DMs open, and so my recommendation is, I think for anyone who's looking to get involved in any of these projects, or looking to sort of learn more, is to do some writing and to do some thinking, and to ask questions, and to put yourself out there. I think putting yourself out there is obviously advice that it's very easy to say, much more difficult to do, but I think it really is rewarded a lot more in crypto, particularly because of this open ethos and this sort of frictionless ethos, almost flat. You don't even have to have, you could be a random frog on Twitter, and you can, gain a reputation as one of the best investors. You can be, totally pseudonymous like Scykeeper, and gain a reputation as, really like a trailblazing developer, and thought leader, and that's incredible to me. So that would be my advice, and also just, I guess, a brief meditation on a part of what I love about this industry.
I absolutely love that you brought that up, and because I want to seriously underline that and then really just highlight that for our listeners, because how I got involved with Saffron is literally almost the exact same way. It was me basically, playing around and looking at DeFi and coming across this project that I saw, back in November. It's like, oh my God, like these people, they're doing something that is unique to DeFi, that, even their competitor, like they don't have a working product yet. Like I want to be a part of this. And in any capacity, I would like to be a part of this. So and it sounds almost like ludicrous in this day and age where we have this old system that, like you said, you got to find a recruiter, you got to get a cover letter, you got to get all this resume stuff done. But I literally just, cold called Scykeeper in the beginning, like right when the project was getting started. And I said, hey, you know, I see extreme amounts of value in this. Here is my background. Here is what I've done, in marketing. Here's what I've done in video production. Here's what I can offer to the table. I will work for free. Like, just, I want to be involved in this. And, he gave me a shot, and it started out like kind of as a part-time thing. Then it changed to a full-time thing. And, in the end, it benefited both of us massively. And, it's really important to kind of highlight that. I think that, this industry that is developing is needing people from all different kinds of walks of life and all different sort of, professions, whether it be more analytical people, whether it be marketing people, sales people, video production people, people that speak well in front of a camera, people that know foreign markets well, translators. Like we're building up this new system, and we need bodies for it. And I think that, if you and I have people that kind of approach me, in my day-to-day life, and that ask me, how do I get involved with some of this stuff? And it's kind of just like really like simple when you narrow it down. It's just you start kind of putting yourself out there, like you were saying, like kind of start making those
For
those
sure.
those efforts. So
I totally agree. And I think also it breeds this virtuous cycle of, people feeling like the way they got into the industry, like us, is, in part just cold reaching out to, some of the industry leaders, people who are working on interesting projects, who are investing and thinking deeply about the protocols. And what that does is it creates this, this flywheel effect where people feel grateful for, like, having these opportunities. I personally feel like I want to pay this kind of thing forward. Andrew took a chance on me. Andrew sort of was open to my DMs and to my, maybe they were naive questions. I tried to make them good questions, but to him they were probably like relatively simple questions about how AMMs work. But he was patient, and others that I've spoken with in crypto, like across DeFi, have sort of shown that same kind of patience and willingness to help. And I think what that does is it breeds this, like, very virtuous cycle of also wanting to pay that forward. And so as much as I can, if anyone's listening and wants guidance, I can't necessarily respond to hundreds of people and help hundreds of people, but as much as I can, I'd like to sort of pay that forward. And it's like one of the things I sort of want to. It's one of the main things I want to have done, but as sort of before I leave crypto, is to sort of pay that forward and help other people get involved. And I think you're totally right. There's such a lack and scarcity of talent, especially with the amount of capital that's flowing into it, and the sort of, I don't know, all the eyes on the space and on crypto in general. There's like the talent that's coming in is much slower,
yeah.
frankly, and that creates amazing opportunities for people who want to get involved now. It's really I actually, just, this is like a brief sort of story. I had a friend of mine when I was at Stanford as like a freshman, and I got there. He was a graduate student in economics. He's really a brilliant guy, and he told me, like, you're living in this incredible era. Like, you're at Stanford, you're in Silicon Valley. in the sort of 21st century. It's like really cutting edge. And like, you look at the people around you, look at what they're working on in terms of like AI and, all this different sort of like machine learning research and sort of bioengineering research, all these things. And like, this is really like a historical moment for you. And I was like, yeah, that's cool. And then, but I didn't really feel it because a lot of the people that I knew were going to work at Facebook in the summer, were maybe starting these like, social media startups that were just, it was going to be like a dorm party app or something. It didn't really seem so, it didn't actually feel revolutionary in the way that sort of my friend was saying that I should sort of feel that it was.
Yeah.
It really only, I think I understood what he was saying when I really got interested in crypto and sort of dove in this year. I think, this actually is, I think it's, this really is the frontier of, like experimentation and innovation. And, there are other really cool industries, but like what better, this really is, I mean, I know I'm sort of preaching to the choir to you, and I'm sure to all the listeners here, but like, that was like another, I guess, light bulb moment. It was like, this is exactly the feeling that I think a lot of the people who are probably, dropping out of school and like living on couches and couch surfing in Silicon Valley in the, 90s and 2000s. That's what it was like. And I think that's, Silicon Valley has lost a lot of that ethos. And I think, obviously they still do a lot of great investing, a lot of great projects that come out of it, but it's become much more institutionalized and much more established. And I think there are other places and where that ethos lives on. And I think the primary place that lives on is crypto.
Yeah. I really love that you highlighted that the altruistic um, sense sort of behind or sentiment behind some of that stuff and just wanting to kind of pay it forward. I feel the exact same. And I think that, it says a lot about you as a person. And I think that's a really great thing to have.
I appreciate that.
So going forward, can you tell me a little bit about your relationship with Saffron Finance and kind of what maybe drew your interest into the protocol?
Yeah, of course. I know you mentioned, you got interested in Saffron because this was like an early stage company that actually delivered a product, didn't really have so many competitors. And, I think when I saw Saffron initially too, and really dug into the architecture, like I was drawn to it for a few reasons. I think Hasib did a really good job outlining the sort of broad thesis around sort of the market that Saffron, like the total addressable market for Saffron, which is obviously massive. I mean, in terms of just like risk tranching in general. And I think Hasib did a really like good job laying out sort of the case for why, Saffron could grow and could continue to sort of expand in really incredible ways. But sort of to get maybe even more in the weeds about like what Saffron can do now in DeFi specifically, I think there was a problem that I've seen with other sort of risk mitigation protocols, namely like insurance protocols, which is that a lot of the protocols that are insured across DeFi actually aren't as risky. So, which is to say that if you go on Nexus Mutual, certainly there's like I think a spectrum, and Nexus is just one example. I think maybe one of the sort of industry leaders right now, but there's a whole spectrum of projects that you can buy insurance for, whether it's Compound or Curve, and there are other smaller ones, maybe less established. But ultimately, any of these insurance protocols have to underwrite the insurance, and so that means that the mutual members or the people who are providing cover have to basically approve the protocol. And so what that means is they're not going to want to provide insurance to the most risky DeFi protocols. And if we know anything about DeFi and new protocols that pop up, is that a lot of them have smart contract risks, economic risks through flashline attacks and other things like that. And not only are all those risks not covered by traditional insurance protocols, but B, there's this incentive problem, which is that insurers are not going to want to insure risky protocols because that they're the ones who suffer if the protocols get hacked. And so that's just sort of a fundamental problem, I think, with I guess this model and how it's sort of provided in DeFi. And so one of the things that appealed to me about Saffron was thinking through how the architecture and the incentives around the sort of risk mitigation differ. For Saffron, you can create sort of a pool or sort of this tranched risk, senior, junior tranche for any protocol. It could be safe, I think have like a reputation for being very safe. And I think like Compound Finance, for example, which is of course, the first protocol that Saffron integrated with, I think does have that kind of reputation. But it doesn't have to be just for those. You could have a Saffron pool for any single protocol in DeFi, including the most risky ones, because what you're doing is you're isolating risk and you're saying, okay, the people that want to participate in this protocol and that want to provide liquidity or they want to use it, they can do so and lever up on that usage, and in doing so provide insurance in a way and cover in a way to the senior users, the people who want to use the protocol but don't want, but are maybe more risk averse, maybe want to sort of dampen some of the rewards in return for gaining some extra assurance that they'll get paid out in the event of a hack. And so to me, that's like a really like that's a fundamental improvement or at least difference from a lot of the other insurance primitives. And Hasib generally talked about how that works in traditional finance, and there's a lot of other things you can do with risk tranching as opposed to just insurance. I mean, tranching can you could have like fixed income for the senior tranche, and I know that Sidekeeper is working on that for version 2. But sort of this fundamental innovation of like allowing not just the safe protocols to be insured, because at the end of the day, do we really need the safe protocols to be insured as much as new risky protocols? Well, we do want insurance for safe protocols too, because everything, there's nothing that can be 100% safe on its own. But really, like, we want for these risky protocols. And so to me, that was this sort of insight, I guess. Another, I guess, frankly, light bulb moment was what drew me to Saffron. And frankly, like, I think we've seen a good amount of usage on Saffron like so far. But I've always had this thesis that Saffron's real value is going to be for these long tail protocols, as it were. So, Uniswap and AMMs have I think generally done a really great job of becoming super liquid and usable for large assets like Bitcoin and Ethereum. But their original value proposition was for long tail assets and to provide liquidity for long tail assets that you couldn't really get in the central limit order book model. And I think that's always going to be the case, regardless of whether AMMs like Uniswap and SushiSwap and their competitors, whether they remain the sort of go-to option for the big assets, they're always going to have that sort of long tail asset use case. And I think the same thing is going to be true of Saffron. I think Saffron's starting off with like sort of the safest protocols, but as it sort of expands to these more risky protocols, I think the usage is going to be the use cases are going to be much more apparent. And so that's, because if we think about it, actually, like, if we're being honest with what Saffron is and any kind of risk mitigation protocol that tranches risk for DeFi usage, there actually is additional attack surface by using something like Saffron. And so, if you want to use Compound, and that, like, you can use Compound alone, and then you have only the risk of using Compound. But if you want to use Compound plus Saffron, you have the risk of Compound and then also the code risk of Saffron. And of course, Saffron's supposed to mitigate that risk if in case anything happens with Compound. But it's also the case that users may not want to take on additional sort of there's more attack surface when there's more code to be working with. And so it doesn't surprise me that, for example, with very safe or like sort of purportedly safe, I think generally are safe protocols like Compound and sort of other sort of DeFi blue chips, people may not want to sort of take on the additional attack surface of integrating, of like using Saffron pools, which then plug into those protocols. But I think that extra additional risk, and frankly, I don't think it's necessarily a risk in the sense that Saffron is unsafe. It's just risk in the sort of very simplistic sense that there's more code. There's sort of more attack surface by virtue of there being more code. But I think that becomes a lot more palatable when Saffron is built on top of and sort of plugged into these other risky protocols. So that's what initially drew me to it. And that was sort of my early thinking around it. And that's, I think, I've sort of evolved a little bit in terms of thinking through some of how the pools can be built. Maybe you can sort of combine different assets together. Maybe you can create different tiers of assets depending on their risk levels. And so it's been really fun to think through with Sidekeeper. I think Sidekeeper is extremely forward thinking and innovative. And it's been really fun also to think with other investors and sort of people who are looking into Saffron in crypto. And I think a lot of people are excited about it and excited for what this can be. And I decided to get involved in part because I was so excited by sort of the opportunities for this, not just the sort of broad idea of risk tranching and sort of what this can be in the future down the line, but even just like the very basic needs in DeFi today. Like when a new farm launches or a new protocol launches, I feel worried about investing in it or using it because I'm worried about hacks. So I'd love to have a protocol that I can use like Saffron, and I think that's what drew me to it initially. And it's I'm really excited for to see how Sidekeeper and the rest of the team develops that idea even further over the coming months and years.
Yeah, it's such a I don't want to sound like a shill, but like I feel uh humbled every time we have our group meetings. The developers are so incredibly intelligent, and like again, Sidekeeper is such a forward-thinking guy, and he's just like solving these problems that haven't even come up yet. It's really incredible and humbling to watch them all work. And I think it's just really interesting too. Is like as long of a time as because we've been around almost 7 months now, um, and as long of a time as that is in crypto, like in terms of our timeline for Saffron, like we're just getting started, and it's going to be such an exciting year, and it's going to be such an exciting decade moving forward with all this stuff as everything starts to evolve and everything starts to iterate on itself.
Yeah, and I think I totally agree. And I think, well, I think to me, like if I look at what I envision Saffron to be, and what I hope it is, at least, and I think this is potentially achievable. I mean, again, this is, I guess I should say, since we're talking about specific protocols, like none of this is an investment advice from
Right.
my end, and
Yes.
all those caveats. Like this is, I'm just thinking about the mechanism, and I get excited about thinking through sort of innovative and really exciting new DeFi primitives. I think Saffron is one of them. But what I sort of envision, this like a long term, what Saffron can be is, basically new protocols as they launch will launch with Saffron pools, and it'll be so easy to spin up sort of a risk, sort of junior and senior tranche for individual protocols, that instead of just farming straight into sort of these new and like providing liquidity into and using these very new protocols, and like not just sort of like Compound and Aave and Cream and sort of lending borrowing protocols like that, and then also AMMs, but also just like the new ones. I imagine like my hope for the future is that there's going to be some sort of ability to use Saffron with new products, and I think that's going to allow for a lot more safe experimentation, I would say, and maybe hopefully less rug pulls. I think that would be like a net positive for the space. If I guess it wouldn't
Yeah.
mean necessarily less rug pulls, but it would mean rug pulls that investors who want to take the risk of rug pull and sort of hack, or just whatever kind of other risk there are with the risk there is with these early protocols, there will be investors who want to take those risks and will be rewarded if those risks never actually end up turning into hacks or problems. But
Mhm.
that will also allow for people who are risk averse to participate. And I think there's really a problem right now that risk averse DeFi users don't really want to participate in new protocols that aren't audited, or that even if they are audited are still new. And I think Saffron can do a lot to help alleviate a lot of those concerns.
Yeah, I think it's a very fair assessment of what our sort of long-term goals are. Um, is there anything else like that is on your radar? Because I don't want to just focus on Saffron. Is there anything else that is on your radar that you maybe haven't talked about recently? It seems like you're already pretty bullish on Ethereum winning that race, that arms race. And actually, since that Hasib episode, I've kind of changed my stance as well because Hasib was like really bullish on Ethereum. Ended up winning out against Cardano and Avalanche and all that sort of stuff. I mean, are there any other protocols like that that you're kind of looking at?
Yeah, I mean, I think this is the question to be thinking about. And I like to, I think being a generalist in crypto is really difficult, and the people who are and do that well, I admire them deeply. I think for me, what I've tried to do is to sort of dive really deeply into specific areas, specific verticals. So that was maybe risk tranching as one of them. Looking into Saffron and thinking through like a thesis and how Saffron can grow. Obviously, also AMMs. That was my first love in crypto, and that's how I got involved with Andrew and Mechanism, algorithmic stablecoins. But really, was another sort of recent deep dive area for me. And then most recently, though, is like what you're talking about now, like competing layer ones, Ethereum. This isn't, of course, DeFi specific. This is sort of DeFi inclusive, but not just DeFi. But I've been thinking a lot about scaling and this problem. There really is like a crisis right now facing Ethereum. It's really prohibitive for a lot of people to use the network. And I think it's easy, even on Twitter, actually, and just generally in like uh, DeFi conversations and chat rooms, like the people who have the most money and the people who are most successful are the ones who are the loudest and take up the most room. So I don't think we actually fully understand the scope of the problem. And a lot of people have been leaving Ethereum, or even just not even coming onto Ethereum, because of the high gas fees, especially when they're alternatives. And so I think, to me, like
Yeah.
we're really in this sort of best of times, worst of times moment for Ethereum, where like we see DeFi exploding and like all this incredible innovation and usage, and yet at the same time, it's like really uh, there's like this gentrification of the network, and so it's like an open question how that's going to sort of resolve itself. And so I've been looking mostly into rollups, and I think ETH2 is also potentially on the horizon, but I think rollups, specifically optimistic rollups and ZK rollups too, but really optimistic rollups in the near term is as a concept, and generally also like the specific protocols. Um, you know, these are something I'm really interested in, and I think also like very bullish on. I guess not really necessarily from an investment perspective, but I mean, yes, from potentially from that, but also really just from sort of thinking through the potential they hold for Ethereum to scale. I'm happy to go into a little bit about that, but I think people who have been around crypto for a while, and I'm definitely not one of those necessarily. There've been people who've been in Ethereum since Vitalik started writing the white paper or the yellow paper, whatever it was. But people who have been using these applications and sort of thinking about Ethereum and crypto for a while are sort of maybe a little bit disillusioned with the whole Ethereum is going to scale narrative. We've heard it before. We're going to hear it again. Like, oh, like it's never going to happen. But I actually think that like if you look, and I think I was actually one of those people. Like even having just sort of coming into the sort of DeFi ecosystem, in May or June of last year, I sort of got accustomed to that kind of, maybe jaded mentality of like, oh, like Ethereum's not going to scale. Like, we're just going to have to look at other chains, or this is just a problem it's sort of not that's sort of fundamental. And I think if you look really closely though, there's actually very good reasons why previous scaling solutions, like side channels, Plasma, other attempts have actually not worked. And I think there are very good reasons why rollups are going to work this time. And so I think it's actually something that if you look more closely into, as I have, I mean, I don't know if I'm right. I will happily admit to being wrong about this if this isn't the case. But I think long term, I'm really excited about the potential that rollups have, to help Ethereum scale. And I don't know exactly. Yeah, I don't know exactly. Like, I can't predict the future. I don't even the near term. I'm not sure what that looks like. But this is I think this is to me like the elephant in the room right now. There are really interesting new DeFi protocols that are sort of being spun up. There are new primitives. There's good marginal improvements over the things that currently exist. But if you're looking to solve a problem in DeFi, it's this, and crypto more broadly, it's this scaling problem on Ethereum. And actually, I'd say there's actually two problems. There's like two problems that really need solving. This one, the scaling problem, and in general also. Thinking through the usability of DeFi. I think, like I had this interaction with my dad's friend who lives down the street from us from my family's house. And was like a sort of a retired professor of accounting. And he's been interested in crypto for a while and has gotten interested in DeFi recently. And he told me he wanted to use Yearn to get yield. And I was like, hey, great.
Mhm.
So he told me like, how do I send my Bitcoin to Yearn? And when he texted me that, I
Oh,
almost had a heart attack, because if you send your Bitcoin to an
yeah.
Ethereum address, you're going to lose your Bitcoin. It's not going to be good. Whatever happens, it's not going to be good. It's just you're going to have no access. So I almost got a heart attack about
Yeah.
like not actually, but it was also sort of an eye opening, again, another one of these light bulb moments that like the levels of sort of complexity in DeFi and sort of using a lot of DeFi are really thick, I guess, these layers of complexity. And it's going to be really difficult to sort of onboard, the next million or 2 million people. I mean, the first couple million that are in DeFi now, maybe they know MetaMask and they know Etherscan like the back of their hands. Like, I think maybe both of us do and other people who are listening to this. But like another elephant in the room is like the usability here. Like, do we really envision a world where MetaMask is going to be, everyone is going to be using MetaMask and sort of dealing in 40 byte, addresses and like dealing with failed transactions and gas fees and looking at what the nonce of a specific transaction is and tracing, no, I don't think so. I think, there will be people who are always going to be on the sort of lower level of this, lower level sort of on the sort of in terms of like thinking through the complexities and dealing with the actual protocols themselves. But there needs to be a lot of improvement, I think, in the usability of these if we're going to see a lot more usage and adoption of DeFi. So those are the sort of two main growth areas I'm looking at and thinking through. So like scaling and then usability. I think a lot of the infrastructure, while it's going to improve, and a lot of the primitives that are being built, I think they maybe maybe Uniswap won't be here in 10 years. Maybe Aave and Compound won't be here in 10 years. I don't know. But to me, they work very well. And I think there are going to be marginal improvements that are made with other protocols that are competing against them, and also sort of in these protocols themselves. But a lot of the sort of the biggest growth areas are not in just building protocols now, but they're actually sort of thinking through some of the problems that plague DeFi and crypto as a whole. So scaling, and then also just thinking about how the usability improves. So those are, I guess, my sort of the two things I've been thinking a lot about more recently. Maybe at a sort of a different level of abstraction than the specific protocols that
Yeah.
I've been diving into.
Yeah, well, I think that's a really empathetic take that, and it's easy for me, and I'm sure you feel the same way, to lose sight of like just how expensive it is to like really transact on Uniswap now with gas fees because I remember not that long ago, trading, converting Ethereum into, another, ERC20 token costs like $10, $5. Now it's like $100 or like 50. And that's gotta be super prohibited to people or prohibitive to people who are, joining with not a lot of capital and just are trying to get figure out what this whole, DeFi stuff is about. And I think that's the thing that fascinates me. One of the biggest things that fascinates me about, the current goings on in crypto and DeFi as a whole is just this whole, how is Ethereum going to solve this scaling problem? And, you know, hearing you talking about rollups and then hearing Asib talk about his own, thoughts on, who's going to win that proverbial arms race. Yeah, I mean, I kind of agree that it's going to be Ethereum. I'm interested to see how it all ends up shaking out.
Yeah, likewise. And I'm hopeful that Ethereum will figure out a way to scale. I think like there are some really, the deeper I dive, actually, the more excited I get. It's actually not the opposite. I was thinking, as I started this sort of deep dive into rollups and into thinking about a little, I really have been looking more into rollups than ETH2, but I think, a lot of the sort of sharding innovation that's going to come from ETH2 is also really important because what rollups do is they put, data computation off chain and they keep the data on chain, which allows sort of, it's almost, I sort of describe rollups as like Ethereum's scrap paper. So if you were like handed like a bunch of long division problems to do, and you were told to sort of do out all of the long division on one piece of paper and like, show all of your work and then hand that into your teacher, you'd only be able to fit a couple problems in versus if you're able to have scrap paper and sort of do the problems on a different sheet of scrap paper and then put the answers on only the answers, you'd be able to fit a lot more in. And so that's how I think of what rollups allow for. They sort of put the computation, like the actual smart contract execution off chain, they keep the data on chain, but that still runs into a problem, which is that, well, you're still limited by the amount of data that you can fit on chain, and that's where the sharding comes in with ETH2. So I think ETH2, like this sort of sharding mechanism that Vitalik and others are working on, in sort of plus rollups together, is going to, I don't know exactly if the theoretical limits on that are any stronger than the theoretical limits on more centralized systems. They might be just as good. So yeah, I mean, I think this is a really interesting, really interesting arms race. I like the way you put it, and it's exciting to invest in, and I'm hoping that, I think the next few months will be really interesting to see how this all plays out.
Yeah, I think we're gonna go ahead. It looks like we've gone over time a little bit here, but man, you have been such an interesting person to have on and talk to. I would love to have you back on at some point, and we can kind of go more in depth. I'd like to shill a little bit for Jason Choi's podcast where you were on and you talk about algorithmic stablecoins and also like incredibly interesting. Listen, he's got a two-parter series. I think it runs about an hour and a half, but you can find that on Block Crunch. I would definitely recommend people who are, want to hear more of Ben and want to kind of find out more about some of the more intricate stuff to check out that series as well. Where can people find you online and what's your social profile look like?
Yeah, thanks, Dingo. Well, first of all, it's been such a pleasure to be here, and I'd love to continue this conversation both offline and maybe another time here. But yeah, so you can find me on Twitter at Benjamin Simon 97, and you can also find me on Telegram. I'm on Telegram all the time, like 24/6, because I am a religious Jew, so I observe Shabbat. So I'm not on there on Shabbat, which is Saturday, like Friday evening to Saturday evening. But basically, the rest of the time that I'm not sleeping, I'm on Telegram. So you can find me there. My DMs on Twitter are open. So yeah, Benjamin Simon 97 on Twitter and on Telegram.
Awesome. Ben, thank you so much again. I really appreciate you taking the time out to come visit with us and chat.
Thanks so much, Dingo.